So, servus. Welcome to the next video. As always, I'm using this here. Tracking. For more explanation, go to the first video. We start with SPY. So what we did yesterday was perfect gap fill yesterday. Maybe we see that on the 30-minute better. Yeah. Perfect gap fill. I talk about this gap fill. Perfectly tested it. Bounced here. In my opinion, was this OV on the A. This A. This would be our high low. And this could already be your A. So today we have good chances to do our B or B. Our C, no, but our B. Again, I said yesterday we have three ways. First one, we gap fill, which we did, perfect. Second one, will fall lower, which right now we can say no. Our next target is this mark here, 671 or 672. If we reject here, it's just a broadening wedge, and our next target is something way deeper. If you're not rejecting there, which I more lean to it, but always have two sides, we just go for new all-time highs. So right now looks fucking perfect. And I lost one of my stocks again. I don't know what I'm clicking here all the time. But I'm losing it. So let's start with block. Just a short summary. So coming from our high to our V. First one finished. Starting the second one. And this whole thing is high low. Why not ABC? Because this side is lower than A. Why not high low and A? Because this side is lower than this. So to be true, this only has to be high low. So I changed a little bit, but nothing for the direction. So for the end, we're coming from our high, our C. And for the bullish tracking, this would be a T. V under A, perfectly finished. High low finished. And we would be on the way to our A now. Let's make that a little bigger. So thing is, for the bullish perspective. For the bullish perspective, we didn't do a peak yet. So we come up. I would say something like this. Maybe not that high. Pullback retest of the breakout of the trend line, and your next target is 31. To be really bullish and say, okay, the bearish tracking is wrong. I already put it in here. I want to break for 74. To really say, okay, we don't have to look at the bearish order again. For the bearish tracking, that would mean this peak here was our T. And even if we go up here, we wouldn't cross that line and would fall down, and most likely doing a new low. For this, again, I put here my B line, bad evil line. I don't want to break $3. $3, I will have to say that the bullish tracking is obsolete then. But right now, it looks good. It's bouncing. I'm not convinced on either side right now, but we are close. FCEL, same again. We're coming from our top, go to our V, high, low, first fractal finished, ABC, coming down, doing our T, doing our V and A, finished. So for FCEL, I also marked it already. We still are going to our A peak, and after the A peak, most likely we're doing a retest, and then we go. We already broke my bullish trend line, which was 11.47. Perfect. So right now, for me, the alt is under 10%. This one, it really looks bullish and nice. For whatever reason, if we really this next week dropping hard and go under this, okay, we talk again. But right now, looks bullish. After A and A pullback, our next target is B for 131. Looks nice. Bad bar from beyond. Same again, coming from our V, top, lower high, midpoint. T. For the bullish tracking, this was our T. And we already did a peak on, when was that? Where is all my data? I don't have data anymore. Okay. Well, for this, A peak was done. Pullback would be done. This would be your pullback, and your next target would be 36. To be bullish and throwing the all the way, you have to break 12.58. But still, right now, my B line was already broken. Okay, we're coming up again. But in my opinion, the only thing what this is you're breaking down, breaking the bullish trend, coming up, and most likely reject here, and then you really see the strong move to the downside. But could be wrong. For me, for absolutely confirmation, I have here my no line. I think if you break this, you really see the strong movement down. But always have two opinions. What this would look like, you're coming from your T down, you're coming up to your M and W pattern, and then your knife. It would be the same like 2020. You're coming from your M, going up to your M and W pattern, and knife. So, yeah, let's look what happens. Grab, I also added a few things. You come from a C, lower high and T, normal V, everything is okay. High, low, you would already did your A peak, and now we are looking at the A pullback. So for the bullish tracking, you have to break over 661, breaking the bull line, Your next target would be 911 and whatever C is done. You could still see a pullback to this trend line and then go, or for the mid tracking, I mean, this is our big A. For the mid tracking, this would your mid A. This would be a mid B, as I wrote it here. This is the blue ones are the small tracking. Because this is mid B, that would mean we could see from here to here the 0.5 fib retracement. This line here. So the pullback of A could be this, and then you bounce. So this is absolutely okay. In my opinion, breaking for 85 would be bearish. You could still say, okay, maybe we need our V under A. So this would be the no-no line. But let's say this no-no line will here because V under A is always V under A. Don't break this or we have to renew it. Right now, it still looks bullish. Nothing changed. Yeah. Blink. So we coming from our top, lower high, midpoint. It is here. The first section is finished. Then you do your ABC, coming down again. For your bullish tracking, here would be a T. V and A, perfect. High, low, perfect. And also for this, in my opinion, we're still looking for the A peak. We are nicely bouncing and running all the time on this bullish trend with a lot of touch points. To get confirmation, you go over the bull line again, 284. And I mean, I don't have an alt for this right now, but to have confirmation to the upside. This breaking this uptrend could already show you something. Doesn't have to, but breaking this line would be bearish. Going under the no-no line at $1 is catastrophic. We have to do a new, but let's see what happens till then. After A peak, your B peak is at 26-ish. Perfect. SAVA. We start again with, we did our V, high, low, A, B, C, finished. Top, this would be a T, V under A, finished, high, low, finished. Right now, we are 8% away where the gap started. This one. So we could, if you go over this line, you could see the gap there immediately. For the alt again, for the alt you will reject between $6 and $5, and we'll do your V and A or a new low. What this would look like would be your T. In 2018, you're coming down. This section would be what we have done in the last weeks, and we would be in this candle. And if you look slightly where the gap started, it rejected. That's why $6 to $5 we have to go over $6 to $5, because then this is wrong, and it only happened one time. If we are doing this, it would be most likely a new low, and then the next months we are doing this. but I still think early next year we will get through this. What I'm more tend to is we are doing this just because of the movement, because we fall down, our T, make our V, fall down, make our V. First point A, first point A, pull back, go up, B, downtrend, higher low, and you would be in this candle here. Play it or miss it, risk it or miss it. It's a 100% risk play. Our price target, our first one, would be gap fill here at 25. A peak should be at 42, and most likely, if you're doing that, you will see something like that. And then we go B. Let's see. Right now, no financial advice. It looks really, really ready. Will be interesting. AI. Again, we coming from our C, lower high, midpoint T, V, first fractal finished. A, B, C, stupid C, because it's only $1 higher than your B, and the B is huge. Then you come down again, LMT, V and A finished, and now hopefully the higher low is finished. For the bullish tracking, higher low would be finished. We are still waiting for the A peak, and the A peak is at $30, and after that the B is at 36. We have an bullish uptrend, but only 3 touch points. Not that nice, but okay. For confirmation, I would say breaking 2020, breaking the bull line. Could still, I would imagine, still could do something like that. You break the trend line, you make a retest, and then you go to a size, maybe some, or volatility and go up. Could also be. For the bearish alternative, you're not breaking this line. This would be a T. You're breaking under the B line, so the higher low would be wrong. For absolute confirmation for this, you're breaking the no-no line at 15, 16. You will make a new low. This would be your new V and A. Then we're doing a low. Your A point would change. Your A would be a 20. B would be still the same. But right now, we can keep bullish tracking and just wait what happens. GNS is doing nothing right now. You're coming from a C to T. V is finished. High low is finished for the bullish tracking. Your A peak is finished. And right now we are looking for, is the pullback of A finished? For the bullish tracking, I changed something. For the bullish tracking, we are finished with the pullback, because in the small tracking you have your V, higher low. There's just one tricky part, the same I had with bull, and that's why I'm showing this. So for the bullish tracking finished, your A, your small a would be this. It's not looking right. For the bullish tracking, this is your A. BC finished. You're coming down. Here's your midpoint. This is your T. For that A is this, you would already have done your V under A. Your higher low would be finished, and you would already be in your little a. This little a isn't allowed to drop under 71 cents. If so, you could still do little bullshit here, nothing, but you're not dropping under 71 cents. If you break the bull line at 129, perfect. Your next target is B at $80. So for the second bullish tracking, this wouldn't be your little a. This here would be your little a. And your little a would, the low would be here. That would be your V under A2. And then this would mean that this was your T. And you still have to do the V under A, higher low, and then we go. It's only what, 30 cents. The only thing is it's time, but the thing is it's only there is an option chain, so it's not that bad because shares you can hold them as long as you want. For the bearish tracking, you're not allowed to break under the no line, 34 cents, because then we are talking about the higher low is wrong. Most likely the V will be wrong, and yeah, we have to look after that and make it new. Right now, it's still looking bullish. We are still range bound since weeks. Let's see what happens. OCGN, same again. You're coming from the top, midpoint T, V, first fractal finished, high low, ABC, coming down, V, second one finished, higher low finished, and we would be on the way to our A right now. And as I said, the A, big A would be a small C. I would go out here, just because you will reject here. For bullish, you would bounce here and go to B, which is at 177. For bearish, this would be your top, your second lower peak, and you would go down. For the small tracking right now, this would be most likely your little B. The pullback should be already finished. Just saying, for bullish, you have to break 190. Perfect. Everything is fine. We go to A. Or you're still coming down to the 0.5 FIB because it's B, and then you go on bounce. No line because you really should bounce here. If you're going under this, yeah, that would be bearish. The thing is, I don't really have an old yet, because we're still in the beginning. So yeah, I'm most likely bullish on this. Nothing to worry yet. FFAI. You're coming from your top again, lower high, midpoint T. We finished, and right now we would be in the higher low. Price targets, I'm not talking about the unrealistic price targets. The normal are $5, 10, 11, and somewhere maximum price is 150. You will reject here, in my opinion. So what did we do the last 2 days? So our V and the A is holding. Our higher low right now is also holding. Looks perfect. From confirmation to the upside. Break 168, bull line, and you go. For bearish version, break under 1.28. And for the old, this would mean we have to look. Then I still, I also have right now not a really proven bearish old. Only thing I could imagine is if you break 131, the higher low, we are looking for a new V under A and a new higher low. Yeah, the only thing you don't allow to break is is this here, because then we talk about different things. Right now also looks absolutely bullish. Perfect. Bull. I also changed some things. You're coming from your C, low high, midpoint T, we finished, higher low finished, and right now we would be in our A. We thought that this was our V and A, but it wasn't holding. So right now, this is our V and A, and higher low is still nice holding. So it looks bullish. For confirmation, break $12 to absolutely cancel any bearish thoughts. Next target would be small a 16, small b 17. I right now pretty convinced because our A peak was nearly the T-line perfect. So in my forecast would be your B somewhere in here. Not anymore in here. My B target, if this is really our V under high low, my B target is 33. I mean, a little bit down, a little bit up. But I had M here. No, my opinion, the M is really here. It's fixed. So this is your target. For bearish alternative, if you break this line, so 10.29, yeah, we have to redo it. But right now, it looks fantastic. So yeah, and again, for symmetry, it would be the same, like taking this price action, flip it here, and this is your midpoint. This would be your A. Then you come down, you come up, you come up. This would be your A. Like here, you're coming down. And this whole downtrend right now would be this downtrend here. And we would be exactly here right now. Because if you look, you have here a higher low. And here you have a lower low. It's tiny, but that's also because this is just shorter. But here you have a higher low, here you have a lower low. And what we are looking for is this movement. For our next price action, it is this movement. And for the big picture, that would be long thing. You have this cup, and then you have this handle, and then you know what this means. You would take this measure and put it up here. But just saying, this will take time. So this cup and handle, we can talk about next year, but it's looking nice. Because someone asked me what was the question? Someone asked me, can you speak a little on how you choose how far out you like to get your contracts? Is it always 4-8 weeks out or farther? And how do you decide? No financial advice, everything what I'm saying right now. And just to clarify that there are so many option strategies out there, and I'm pretty sure that there are a lot of better option strategies than what I am doing. But okay, let's say on this example here, I'm always tracking first to get an imagine what the stock is doing. And let's say we are here and I'm still tracking for this downside. I'm not going into options. Then we are coming here. V under A like we did, I think, last week. Here I bought, and this I'm not buying 4 to 8 weeks out. I'm always buying 6 months out. Thing is, why? Not because of having time, because that's no safety. It's the same thing with if you buy 1 year out. If you don't have an idea what the stock is moving, that was always the same problem with memes. Yeah, just buy 1 year out. Maybe you are lucky and you get the run. In my opinion, look, get an idea of what the stock is doing, and then you plan your move. So I bought cores 6 months out here. I'm still holding them because even with the drop, I think they are right now slightly red, but not much. Because I'm still convinced this was our V and A. If we break this line, I would get out of them, of course. They are, I bought near the money. I bought 15 to 20-ish, I think. Wait, I can look it up. What do I have for bull? Bull right now. I have 15 and 20s. And that's it. The thing is, why 6 months? First of all, they are not really crashing when you get a little down move. And most of the time, let's say next week, we are running this, for example. So from 11 to 16, they will be up most likely 500 to 1000% already. I saw this here already because I bought my cores here, and at this point I sold them here, I think, yeah, and they were already up 2000%. That's why I'm not looking for weeklies or monthlies. Yeah. For another example, SAVA, for example, for SAVA, I bought some $4 cores. They were 2 months out, just because I saw we will at least go up here. I already sold these ones, and then I have 6 months out for $10. But to say this, in stocks like this, I only put money. I don't care, you can say, because you have such a big option spread, price spread in here. If the move is wrong, you can't get out. If the move is right, absolutely fantastic hit. But most of the time, as I said, only 6 months out. For SPY, it's 1 or 2 weeks out, but that's something completely different. But that's just a personal thing, because some of my colleagues are playing, waiting for this, buy course in the money, for only 2 months out. It's just, what is your risk management? How much time do you have to look at it? Because for me, I'm making my tracking. I look in the morning, then I look midday, and then I look before market close. I'm not really looking all the day on what the market is doing, except when I may be trading SPY. And with 6 months out, I don't really have to worry. And yeah, that's it. Okay, so thank you for watching. Again, if anybody has questions, just write it in chat. If you want other stocks where we could look at it, also write it in chat, in the comments. And thank you for watching. Leave a like if you want, and subscribe if you want. All the YouTube bullshit. And see you next time.